It's the time where machine intelligence, machine learning, AI automation is now becoming real and tangible. 20 years ago, there was talk of this, and it was AI was going to take over the world. Well, AI is not going to take over the world, but AI is going to take over a lot of the manual transacting.
Growing a business requires a holistic approach that extends beyond sales and marketing. This approach needs alignment among people, processes, and technologies. So if you're a business owner, operations, or finance leader looking to learn growth strategies from your peers and competitors, you're tuned into the right podcast. Welcome to the WBS Podcast, where scalable growth using business systems is our number one priority. Now, here is your host, Sam Gupta.
Hey everyone, welcome back to another episode of the WBS Podcast. I'm Sam Gupta, your host and principal consultant at the independent ERP and digital transformation consulting firm Elevate IQ. The needs of services industry might differ substantially, especially when you think of subscription, revenue recognition, and ASC 606 compliance capabilities. The ERP systems designed for services industry might be very deep, with the grant and fund accounting having payment terms and multi-element allocation at the line item level on the contract, and HIPAA compliance capabilities. These industries also have very unique requirements such as integration with best-of-breed CRM and project management software flavored with the capabilities for these industries. And that's where Sage Intacct really shines. In today's episode, we invited Mike O'Brien from Sage Intacct from the ERP community. We discussed the target market and its capabilities for many industries. We also discussed their roadmap and which features and capabilities their customers can expect in the next few years. With that, let's get to the conversation. Hello, everyone. Welcome to today's show. And if you're joining for the first time, this is a very unique series that we have put together. In this series, we invite our OEM friends, and the goal of this series is going to be to review their positioning as well as to review any of the features or capabilities that they may be working on this quarter. Last time we had Thibaut here, and that's the OMS platform. So one of the goals that we have as part of this series is to really tell you how each of these systems and technologies fit in the architecture and where their importance is going to be. For today, we have a very exciting solution. And it's Sage Intacct, one of the most popular in the cloud-native ERP community. So I am super excited to have them. So before we dive into the demo and the capabilities, we are going to start with everybody's intros. I am going to start with my intro. If you don't know me, Sam Gupta, principal at Elevate IQ. Elevate IQ is the independent ERP and digital transformation consulting firm, and we work very closely with our friends at Sage. So, Mike, I would like to welcome you now. Do you want to quickly introduce yourself, who you are, and maybe introduce Sage Intacct as well?
Sure. I'm Michael O'Brien. I'm a principal solution consultant at Sage Intacct. I've been with Sage Intacct going on 7 years now, and formerly a CPA many years ago. I left the audit and accounting profession for the darker side of technology side of accounting, and have been on technology side of ERP systems for the better part of 30 years. So I've seen the evolution from the mainframe all the way up through today's cloud-based systems. So happy to be here, Sam, and thanks for inviting me.
Yeah, and happy to have you as well, Mike. And I think I agree with your comment. I mean, see, back in the days when you have the mainframe, even some of the legacy systems, they might feel like mainframe even today. So obviously, Sage Intacct is very well designed in general from the cloud native perspective. So it's a beautiful system in general. Now, if you are in the audience and joining for the first time, make sure you guys post your questions and comments. Typically, your questions are going to take the priority for the show, and we'll try to cover them as much as possible during the show. If we run out of time, then we will make sure that you receive your answers. On that note, I am going to ask the audience, okay, where are you joining from? Can you post your locations in the comment, LinkedIn or YouTube, wherever you are? So Mike, let's cover the sort of the first question, overarching positioning for Sage Intacct. And I know when we look at these ERP systems, it gets very confusing. Everybody's talking about, GL, AR, AP, inventory, sales, CRM, so many different things. But when you look at the unique capabilities for the industries, each ERP system is designed for very specific micro vertical, and it gets really deep into those micro verticals. So do you want to talk a little bit about, where Sage Intacct is in general in terms of the verticals, and what are the specific capabilities that are going to be really relevant for those verticals? Mike, over to you.
Yeah, sure. I think the broad-based platform of Sage Intacct was architected in a very elegant, simplistic manner. The elegance of that architecture now lends itself to certain micro verticals and quite a broad range of them. I think the biggest footprint verticals that we have right now, the not-for-profit segment, we do a tremendous amount of work in there, and the application is beautifully suited to the needs of that. Software and professional services, very nicely fitted to that with some specialized products around contract management. Healthcare, covering the requirements of healthcare through integration with EMRs and with HIPAA capabilities, so that private information can be shared within the application in a secure manner, and giving you the protection under HIPAA requirements. So, those are a taste of three of the verticals. Financial services, there's a whole realm of others where the application has been tailored to meet the needs of those.
Yeah, so very interesting. So let's get a little deeper into these verticals. So from your experience, Mike, when you look at some of the capabilities for these verticals, so let's say you have either a horizontal solution and they are not really configured for these verticals. What are some of the specific capabilities that you are seeing that are going to be super critical to be successful in these verticals?
Yeah, I think if we talked about software and services, for example, the capabilities in Intacct around contract management. So contract management involves things where a contract in accounting terms is a bundle of goods being sold. And in that arrangement, there could be many different ways of billing for items. So you could have many different products being sold, licenses, support. Pricing of those can be very different from the method of revenue recognition. And then you add the ASC 606 requirements where the bundle of elements needs to be arranged in a way to make sure that revenue recognition is done in accordance with ASC 606. So there's an example of a highly specialized part of Sage Intacct. And it works beautifully in software and services, but more and more companies are moving to subscription models. We have fashion companies that are selling clothing on a subscription basis. They're going to face the same issues that software companies face. In the environment itself, in the application itself, the app is oriented to provide for what we call dimensionality. So these dimensions lend themselves beautifully to activities, projects, grants, for example, in the NFP sector, where both time, material, cost needs to be tracked for proper grant requirements. That application, broad range of capabilities as well, but it's particularly well suited to address the needs of NFP in terms of grant tracking. And then the multi-entity environment, multi-fund environment. So we would refer to them as entities for a commercial enterprise, a regular for-profit enterprise. In a non-for-profit enterprise, these could be different funds. So inter-fund activity, intercompany activity, all automation. I like telling CFOs, Intacct gives you the best of all worlds, where you could run your business in an entirely centralized model for many companies, an entirely decentralized model for all your companies, or a hybrid approach. And you can do all three contemporaneously. So we cover a wide range of the way businesses need to run, wide range of functionality to help businesses the way they need to run. So they don't have to bend their business to the needs of the application. The application will bend to the needs of the business.
Okay, amazing insights here. So I am going to quickly touch on the comment, and then we'll come back to the next question, or maybe we'll do a little demo here. So we have Cass joining from Fort Worth. Thank you so much for joining. And then we have another user joining from Maryland, and we don't have the name. So if you can post your LinkedIn profile or the name, we'll definitely appreciate that. We want to know you. We want to meet you. So we have one more user from Southern California. Again, please post your name as well as the profile if possible. Welcome to the show. Then we have Sarah Page joining from Dallas, Texas. A lot of folks from Texas, which is wonderful. Then we have one more LinkedIn user joining from North Carolina. And LinkedIn typically does this if your security settings are not shared. And that is the reason why your name would not be displayed. Again, if you could post your name, I'll definitely appreciate that. And then we have Holly joining from Colorado. Then we have Kelly. Then we have Greg from Toronto. Alana from California. And then we have Rob joining from Toronto. Guys, welcome to the show. And the question that I'm going to pose for you guys is, when you have used the ERP application, I don't know which industry you are from, and if you can post the industries that you belong to. So industries such as your software, not-for-profit, financial services, if you are from those industries, and if you have seen any challenges with ERP systems, if you could post your industry as well as the challenge that you have seen. If you're not from these industries, then post whichever industry you are from and what challenges you have seen with the ERP system that you may be using as of today. So, Mike, I am going to go back to the discussion that we were having, and you mentioned one of the key terms, ASC 606, and I hear this from my customer base as well. Okay, so there are a lot of different industries, as you correctly pointed out, that they are exploring subscription-based economy, and there is a real goal there in the whole subscription-based business model. Every business is trying to figure out, okay, how can you get that predictability in the revenue through subscription-based business model, but enabling that could be extremely difficult. So I'll give you one example. For example, let's say if you look at machinery manufacturer, okay, they have the ASC 606 issues overall with their ERP system, because the ERP packages that they might be using is really for manufacturing, but they don't do as good job of revenue recognition as well as from the subscription perspective. So now, if you want to touch on some of the specific capabilities of ASC 606, what are those capabilities that are going to be required in the ERP system? And if they don't have them, then there is going to be a ton of admin effort in enabling that, in reporting that. So anything that you can touch from that perspective and demo, Mike.
Sure. Yeah. So in general, dashboards are going to give you access to a wide range of data in the reporting bodies, but the dashboarding capability to identify specific things like, being able to forecast what's coming up in our contracts, both from a billing perspective, payment. So we know the payment terms of these contract arrangements and the individual line items on the contract. Remember, you could have many different products being sold to a customer, and at a line item level, each one of those could have different payment terms, different billing terms, different revenue recognition terms associated with it. So a contract forecast is important so that you can see, what life is going to look like out into the future from a revenue perspective, from a billing perspective. And then it takes a month to build out. It's crunching through a lot of data. But that gives you a good example where looking at one single arrangement with a customer that could have multiple elements to the arrangement, could have multiple billing terms, payment terms, revenue recognition terms, even expense forecasting. So part of 606 is getting a better measurement of the expense recognition in conjunction with and in consistency with the revenue recognition. So Intacct's contract engine brings that together for you as well. Not only does it do the revenue side, but we provide for the expense recognition and then the forecasting capability of that, because we know what the future is going to look like on each of those contract items. So if I go back to my contracts here and look at a particular contract, and any one of these, I'll just pull up one here.
Yeah.
It's got some items on it, and you can see the individual licensing elements. So each one of these is going to have its own billing, its own revenue recognition. So we're going to have a revenue recognition method for it. And in today's world, we could still maintain dual revenue recognition between the prior standard and the current standard. So you can see the consistency of that. And then you can apply a billing term to it. So the billing mechanism and the billing amounts could be significantly different than the way the revenue is. And the final piece there, I think that's important, is multi-element allocation. So this is the concept where, while we have a stated contract price, maybe we've given them the software for a 3-year term at $50,000, but given away support for free. Well, under GAAP accounting, under ASC 606, nothing is free. Revenue has to be allocated against that. So the way you do that is through a multi-element allocation. And we built that as a core component of the contracts management engine for any business that's doing any type of multi-element arrangements, whether they're subscription-based or not. They could still fall under the construct of 606 and the 606 recognition. Multi-element allocations is going to be part of your life. If it isn't already, it probably is going to become part of your life if you're within scope of ASC 606.
Yeah, so very interesting. And I always like to compare this with some of the other ERP systems in the market that these guys might be using. And some of them might be very, very, very lean and basic ERP systems, right? Obviously, they are not going to have as deep depth as what you are trying to show here. So let's say if you compare this with other ERP packages, I don't know if the revenue recognition arrangement that you had showed at the line level, personally, I don't think I have seen, unless I'm looking at something that is designed for the ASC 606 compliance. So that is number one. And number two, the multi-element allocation. I don't know how many systems can really support that. And the point that you mentioned that if you are selling the support for free, you have to still recognize from the revenue perspective. Otherwise, you are probably going to be in non-compliance. So in your experience, let's say if somebody is using QuickBooks or maybe a manufacturing system that does not support ASC 606, so how are they going to capture the multi-element allocation? Are they simply recognizing it somewhere because they are not getting audited? What have you seen, Michael, in your experience when the system may not have the capabilities to support that?
So if on the smaller side, they're doing it in Excel. Very, very complicated Microsoft Excel model. You're subject to a lot of exposure with that, as Excel is an excellent tool. The beauty of Excel is you can do anything you want. The danger with Excel is you can do anything you want. So how do you control updates and modifications to a spreadsheet? How do you provide auditability and reliability? How do you ensure the integrity of calculation across the spectrum? So that's one of the challenges on the smaller side. I think on the larger end of some companies, you'll see a separate revenue management engine, a separate standalone best-of-class product that is brought in to do nothing but revenue management. And now you're saddled with the challenges of integrating that revenue management engine with the core operational sales side of the business. So, an ERP package that is built to embrace that recognition model and the complexities associated with it is really the right path, especially for a smaller company looking to come up to the next level of capability. I would strongly suggest you resist the temptation to go with modular solutions that are disjointed and require integration. Move yourself into a state where an all-in-one application has all of the robust capabilities built in it, and it can provide you with a much more stable, much more predictable environment.
Yeah, could not agree more. Thank you so much for that. So we have some comments from the audience, and I want to make sure that we are covering them. So I think this is the answer coming from the challenges that Kelly has seen. And Kelly Baines, follow Kelly. It's KELLYBAINES. So the question or the comment she has is consolidations and the partnership accounting, financial services. So I don't know, Mike, do you have any sort of comment in terms of how the partnership accounting works in the financial services space? I would think that this is going to be fairly because the number of partners that you have to manage, and I don't know if you're managing, I don't know whether Kelly is referring this more from the accounting practice perspective, or is this comment more from the financial services perspective? So whatever you can show for the financial services companies, Mike, and touch on the comment.
Yeah. No, it's a great question. I think that partnership accounting, it brings back memories, both positive and nightmare, of advanced accounting and the depth to which partnership accounting takes you. And I don't think that's changed in the 35 years since I've been in college. But it is probably evolved to become more complex because tax structures have just become more complex. So we could be dealing with a financial services company that's running multiple entities as sub-S corporations, as LLCs, maybe straight up as partnerships on the GAAP accounting side. Those are accounted for using GAAP accounting for corporations, accounting for a regular business entity. On the tax side, though, they're taxed as partnerships, so they have to do straight up partnership accounting. So there's many ways in some really, again, elegant implementations of Sage Intacct around things like user-defined books. So I could set up a user-defined book that maybe has my partnership accounting, my tax statistical accounting in it. Those books will run parallel to the general ledger. So I can maintain the same chart of accounts, the same posting structure of all of my data, but separate my GAAP accounting books from my partnership tax compliant. And I can reconcile the two. So if you're familiar with that space, typically a K1 is being issued to each partner. The K1 has all these specialized boxes of basis adjustment for the value of their basis in the partnership. And what happens is businesses lose track of that. The accountants, the tax accountants keep track of it. The tax accountants are aware of it. But to an individual partner in the firm, they don't understand what their basis, they don't understand the difference between their equity in the partnership and the inside or outside basis that could be created through all these tax adjustments. The user-defined book provides a perfect avenue for the reconciliation of your GAAP accounting basis in your GAAP books to your tax basis that may be managed by the tax firm. And as I said, typically that's invisible to the partner. You could have a basis in a partnership. How the tax basis is calculated is utterly invisible. We provide transparency and visibility to that, auditability. So if a partner moves from one tax practitioner to another, they can bring all of that detail. They can bring that information with them. So it's clear to the new firm that they're transitioning to what the status of the partnership equity, both from a tax basis and a GAAP basis, really are. So lots of nuances in there, but I think, again, the architecture of Intacct, the implementation of these user-defined books, the implementation of the architecture itself really lends itself to those type of highly complex situations, but we solve it in a very simplistic, elegant manner.
Yeah, so very interesting commentary there. And Mike, I am going to touch this comment from one more perspective, and in the industry that I have seen, and I'm probably going to bring some comparison here of the real life systems. And sometimes it could be very confusing when you look at the partnership accounting. And some people might think that, let's say if I talk about Acumatica NetSuite, NetSuite does ASC 606, Acumatica probably has that as well. But then they also have the branch concept inside the ERP system. So you are going to have the company, you are going to have the branch. So when you are talking about partnership accounting, here you are talking about maintaining the separate books overall. And I don't know how many systems really have that capability. And this is probably going to be relevant in the case of your franchise model as well. So in the case of franchise model, I don't know whether you have seen this in automotive franchise, automotive dealership. Then you have the hospitality franchise. Then you have the automotive tools companies that also have their franchise. And sometimes what they do is they are going to be controlling the books of their partners. So even though it is going to be independently owned from the ownership, from the legality perspective, the books are still going to be controlled by the parent OEM who is actually offering the franchise. So now, in your mind, Mike, would you consider this comparable to the partnership accounting, or is it different?
There's a lot of similarities between it. I think there's a break point between being a managed services organization. For example, in medical and financial services and hospitality, we see these managed services organizations appear. So the MSO will run the back office systems for all of their wholly owned subsidiaries.
Yeah.
They will run back office systems for partially owned subsidiaries. So you could have consolidation roll-ups that require minority interests being eliminated as part of the partnership roll-up. You could have the managed services organization providing services for another enterprise in which they have no ownership. They're just contractually doing the back office accounting, back office systems operations for them. So those are not consolidated into their roll-up structures at all. They're just freestanding businesses. Now, Sage Intacct, its multi-entity structure architecture lends itself beautifully to allowing the MSO to set up all of those different types of organizations, wholly owned subsidiaries, partially owned subsidiaries, no ownership interest subsidiaries, where they're just doing the office accounting, but still run that from a top level global manner so that there's a lot of shared services, a lot of shared vendors, customers. You don't have to set up redundant charts of accounts, redundant entity activities. And the MSO can then give each entity group whether it's the consolidated group, the partial ownership group, the independent freestanding enterprises, all of the financial reporting that that each of those segments are going to need. So, in this type of roll-up structure, a subsidiary could roll up to another parent company. That parent company could be members of another group that roll up to an ownership group level, and then those could roll up to the MSO. There could be other freestanding enterprises out here that don't roll up to the top level MSO, but they're a full, I'll call them a full service member of the entities that get established within Intacct and can be managed within Intacct. So under this top level umbrella, there's a lot going on. All of these entities could be, as I said, partially owned, wholly owned subsidiaries, or freestanding subsidiaries, but they're all first-class members of the enterprise architecture. And we get the concept of what we call multi-entity shared, where we can share a lot of the workflow activity, vendor approval, vendor setup, customer management. All of that can be done in a shared model so that we're not creating redundant customer records at each entity level, further complicating the synchronization of master data.
Okay, amazing insights there. So we have one more comment. Let's touch on that. And I am going to ask one more question to the audience. And this is going to be any features or the capabilities that you were hoping to see in today's session. Comment that if you want us to touch anything in this session, please comment. Okay, so this particular user, I don't have your name. Please post your LinkedIn profile or the name so that we know who you are. We always like to engage at the personal level. So here they are saying we are also allocating sales commission expense to the contracts in Excel. It's very manual, and sales commission is a beast in general. So Mike, in your experience, do you have any issues overall from the sales commission perspective? I don't know if there are going to be any sort of consideration on the ASC 606 when you think about the sales commission, because that is probably going to play in, what is going to be the cost of your contract, I guess. I don't know. So do you want to touch on this, how you have seen in different industries and the challenges that you have seen, Mike?
With relation to the sales commission expense? Yeah. And that's a great question. It's a great point. Again, under the contracts module, if I'm looking at an individual contract with one of my clients, I can see all my contract line items. But down here, I can see the contract expense details. So if I have to add sales commission as one of my expense items, I can specify the amount of the commission. So this would be, what was paid out on the commission basis. And again, here I can post a revenue recognition method or expense recognition method, which can correlate to the way the revenue has been recognized or whatever standard our auditors have, required for the recognition. So now that contract expense item can be amortized and is linked to the base contract itself. And that is really important for establishing the total value of the contract, both from a contract asset or a contract liability standpoint. So for GAAP presentation purposes, you have to, at a minimum, disclose what those contract asset and contract liabilities are. Having them in Excel, again, it's disjointed from the source contract transaction that's happened. And by linking the two together, having expense details and contract line details on the same contract object with the same customer simplifies it, but gives you the capabilities to report that net contract position, both from an expense and, from a contract asset, contract liability standpoint.
Okay, very interesting. Thank you so much, Mike, for those insights. And if you guys have any sort of follow-up questions, obviously comment those and we'll be happy to address those. So, Mike, we are at roughly half an hour point, and I want to make sure that we are covering both of the segments equally well. So I know that you wanted to talk about the quarterly update. And as part of this series, we are always looking to see what you are working on in this quarter or maybe worked in the past quarter. And when we are going to invite you next quarter, then we want to see, whether those capabilities are there now. So let's say if I want to visualize in my head where Sage Intacct is going to be focusing on, let's say in the next year or so, what are some of the capabilities that you are going to be focusing on in this quarter, as well as probably the next quarter?
Yeah. So and I can say as a member of the company here now for 7 years, prior to the Sage acquisition, the company was chugging along at a nice pace in terms of new functional releases. Post Sage acquisition, I would say the rate of development of investment in this particular platform, Sage Intacct, has exploded. So a couple of the nice things that are really hitting the market now is AP, what we call AP bill automation. AP bill automation is going to allow us, for example, to set up entities with email addresses, and now your vendors can email a bill to you. Intacct will pick up the email, read the attachment, auto code the AP bill, upload it to Sage Intacct, and as you provide coding to those AP bills, Intacct's machine intelligence will remember that. So next time I see an AP bill from that particular vendor, Sage Intacct's going to know how to code it. So, for example, here's a bill that was uploaded. It's got a resolve issue with it. So this was the first time the system has seen an AP bill from this vendor. The attachment will be right here, so I can see exactly who it came from. And as soon as I provide the coding, and in line right here, now I can add that new vendor. So if it doesn't know who the vendor is, I can add the vendor right here, add my GL coding string. And once I've done that, now the machine learning understands what the context of that, who it is and what context we use that vendor in. Next time it sees an invoice from that vendor, it's going to code it for me. So it's going to take the burden off the AP team to manage each and every AP bill. Those can be workflow for approval. So that AP automation is new. That's a really significant productivity enhancement. There's new functionality coming around the consolidations engine, expanding the capabilities, especially around those partial ownership interests, partnerships we were talking about, partnerships and LLCs. There's a huge effort to expand our footprint into construction. So Sage Intacct is the next generation construction platform for Sage. Sage has a tremendous footprint in the construction industry with its legacy product, and all of that functionality is being migrated into Sage Intacct, and a very aggressive development schedule there. So there's lots of really interesting stuff coming on construction front. NFP, not-for-profit, continues to be a focus of the development team as well. So great new functionality in the NFP side. If you are an NFP and you're running QuickBooks and you've got multiple funds and inter-fund balancing and NFP reporting requirements, there's a lot of productivity gains awaiting you if you migrate to Sage Intacct, and new functionality being delivered there as well.
Okay, amazing. Thank you so much for those insights. And audience, if you have any questions related to these capabilities in terms of what you can expect to see in the platform, please comment. We'll be happy to cover those. So now, some of the follow-up questions, Mike, on those capabilities, right? So let's say if you look at the bill automation, which is a great feature, and I always like to compare this with some of the alternative that our customers are going to have. So, for example, let's say if you are simply looking at sending the bill, from the vendor perspective, this is great because, it's going to be very QuickBooks-like experience that the vendors can send the bill, and it is going to be recognized automatically the way QuickBooks used to work. If you look at, some of the ERP systems, it's a very manual process because you have to get the bill, you have to get it in an email, you have to upload it, and then you have to match. Each bill might take, 10, 15, 20 minutes, sometimes half an hour, depending upon how fast the person is. So obviously you have a lot of efficiency gains here. But in the market, there are a lot of different tools for AP automation, and they do a lot more than just sending or capturing the bill. From their perspective, there's a real vendor collaboration happening from the AP automation. So for example, the collaboration starts when you are going to send the PO, then you are going to have PO confirmation, then you are going to have bill. And sometimes the transaction could be as thick as sending the real BOM, sending the real engineering drawing. So now when the customers are looking at, let's say, Sage, I don't know which industries can use the out-of-the-box capability that Sage Intacct is going to provide. And are these companies going to use your capability as well underneath? How is this whole thing going to play, if you compare with the vendors' capabilities as well as some of the industries, Mike?
Yeah, I think that, no one vendor does everything, okay? And no one vendor will ever do everything, contrary to what many of the vendors will tell you. I think this is this Sage Intacct AP automation, in my estimation, is, and having been a former CFO running a company that ran a multi-instance of QuickBooks, processed over 20,000 transactions a week through that in that enterprise through Sage Intacct. I look at this as a volume scale capability. If I can take 90 or 95% of the AP and automate that, and there's still going to be a 10 or 15%, somewhere between 10 and 15% touch rate on many of the AP bills. But even if I can get 75% automation, that's a radical transformation. I've seen estimates everywhere from $30 to $150 just to touch an AP bill to process. So if I'm processing a $100 AP bill in my system and it's costing me $100 to process it, it's just crazy, isn't it? And it's crazy that it's been that way for, ever since computers came into play for AP. I will tell you, one of the huge transformations that's going to come, and it's coming fast, and it's been implemented in different phases in Sage Intacct, is what we call our service fabric. And the service fabric is going to provide for the digital transfer. And this isn't the capability to scan an invoice and digitally read it, upload it to a system. That's great. That's what we're doing today. Digital transformation and service fabric is going to be, well, what if that vendor that you're dealing with is also using a Sage product? And just by virtue of them entering that AP bill in their system through a trusted connection in Service Fabric, that bill can show up over in your company's instance without anybody transacting anything. The Service Fabric validates that customer. Well, it validates that vendor's transaction coming over to you, records it, codes it properly, and now you've got a trusted exchange and even a payment service going on between there. So Service Fabric is going to eliminate much of the touch. In fact, entirely eliminate the touch of those transactions and elevate the trust level of the transaction geometrically, because now it's part of our service fabric. You're a registered, trusted participant in that fabric. If you transact with another company, they can rely on the context and the nature of that transaction. So it's now the machine learning layer, the machine intelligence layer is doing the work for you. So Service Fabric has touched in the AP automation. Service Fabric has brought us great banking interconnect activity to auto-reconcile bank accounts, to auto-record banking transactions as they occur, credit card transactions, things like that. Service Fabric is going to be only expanded to build this trust community where transactions now can flow from one system. If a customer is using Sage Intacct on one side, customers using Sage Intacct on the other side, those transactions now will happen automatically between their systems without any human intervention. So it's a really exciting time in my mind, it's the time where machine intelligence, machine learning, AI automation is now becoming real and tangible. 20 years ago, there was talk of this and it was AI was going to take over the world. Well, AI is not going to take over the world, but AI is going to take over a lot of the manual transacting that we do today. I think that's a low-hanging fruit that machine intelligence, artificial intelligence can pick off. And it's going to provide for an incredible level of automation and scaling of businesses. So even a small business can do tens of thousands of transactions where today they're constrained to doing maybe a couple hundred or 1,000 transactions a month.
Yeah, so amazing insight. So we are definitely going to touch a little bit more on Service Fabric, and we have Anders in the room, and Anders has, follow Anders' screen. It's ANDERSGREEN. And his question is, Service Fabric sounds like a Sage ecosystem EDI. Is it a replacement for EDI? So now I am going to touch a few things from my perspective. Mike, then you can touch on those as well. So number one thing, that banking interconnectivity that you mentioned, as well as the credit card automated reconciliation, that's rocket science in general. In my experience with ERP systems, when you were talking about those mainframe systems, typically ERP systems were not as good at the automated reconciliation, what you could see in the QuickBooks of the world. And the reason for that is because QuickBooks was always designed for these experiences. And even if you go for systems such as SAP, they typically struggle to enable the same process. So it's amazing that Sage Intacct is trying to do that. And this is going to be the QuickBooks-like experience where you are going to get these bank statements right from the bank, and then they are going to be automatically reconciled. In my mind, there are two systems that can probably do this, and those are going to be, or three maybe, probably Sage Intacct, NetSuite, Acumatica. Now, when you talk about the Service Fabric is a very interesting concept. because, the replacement here is going to be, and Mike, I don't know if you are familiar with systems such as Coupa, Ariba. Okay. So they were designed for more of the procurement network. There are always going to be 2 or 3 different ways of doing the same. So under touching on EDI is one way of transacting with your vendors. The second always is going to be Coupa or Ariba, but not everybody can afford that. Okay, so Punch Out is always going to be very exclusive community, but you are going to be communicating and collaborating with vendors through many different mediums. One is going to be your EDI. The second is going to be your vendor portal. The third is going to be Coupas or Aribas of the world. Everything is going to have sort of the pros and cons. The service fabric concept is very unique in general, the way you are describing between the communication, between different Sage systems. But not every customer is going to be on a Sage system. So I don't know if there are going to be any boundaries of the service fabric in your mind. Do they still need the Coupas or Aribas or the EDIs of the world? So offer whatever commentary that you can offer, Mike, from your perspective.
Yeah, and I think that's an ongoing evolutionary discussion. That interestingly, Aaron Harris, who was the one of the founders of Sage Intacct, is now the CTO of Sage itself. So Aaron is at the helm of the technology direction here, and he had the vision back in the early 2000s to build a cloud multi-tenant accounting application, and people thought he was crazy. It was unheard of. It was not secure. It was everything that it can't be. And here it is now in 2023, where if you're not a cloud multi-tenant application, you're probably not going to, you don't have a very long runway in front of you. Let me put it that way. So the service fabric is the early stages here. I don't think it's going to replace EDI. It's not going to replace Coupa. It's not going to replace the procure to pay vendors that are out there, those procurement networks that exist. It's going to cooperate with. So our service fabric is not going to prevent an EDI transaction. It's going to embrace an EDI transaction. It's just going to become another member of the service fabric service layer. And we can hide the complexities of EDI from a lot of customers. So now where, perhaps before there was a technical challenge with embracing that, being able to use an EDI network, Service Fabric is only going to make that simpler and make it easier for enterprises to engage in that without a high degree of technical specialty behind the scenes. And then, the other procurement networks that are available out there, again, there's no reason we can't plug our Service Fabric layer into that, cooperatively work with that, not competitively compete against it. So, I think the days of building a proprietary closed network like that are coming to a close. And it's going to be open networking, an open layer like Service Fabric, where, we can expose that to other vendors. There's no reason a customer running SAP can't use the Service Fabric layer to exchange data with a customer running Sage Intacct or Sage Manufacturing, or Sage Construction. All of those, I think the Service Fabric layer could be a great, it could be a great productivity boost for any enterprises that are transacting with them.
Yeah, so very interesting commentary there. So now let's go back to some of the commentary that you had offered related to construction. Okay, and construction in general is the beast from the ERP functionality. Every single ERP vendor out there might claim that I can work in construction, but they don't understand how difficult it gets in general. Okay, so in your experience, obviously the legacy platform that Sage is going to have, they are going to be way deeper with respect to the construction functionality. I don't know if Sage Intacct has all of that today. And you mentioned that you have very aggressive development schedule. So obviously you are developing these capabilities as of today. So maybe touch on what you have as of today, where the construction companies are probably going to find challenges with the capabilities that Sage Intacct has as of today, and what they can expect to see, let's say, in a quarter, in a year, from the Sage Intacct platform, if they are going to be utilizing it.
Yeah, I think there are product platforms out there that provide everything under the sun. Or for a 10,000 person enterprise, the combination of payroll, HCM, financials, all of that bundled together. A Workday, Workday is an offshoot of the PeopleSoft model. It's an evolution. I see it as an evolution of what PeopleSoft was to a cloud-based solution. Very good product, very good company, but I think Sage Intacct having a bit more focus on just the financials in their early stages, in their early evolution, with the introduction of Sage, taking ownership of Sage Intacct, and now expanding. So Sage Payroll is now a capability built into the Sage platform. Sage Manufacturing, Sage Construction. You're seeing the evolution of Sage's products into these, I call them larger enterprise capabilities. And along with that, the more enterprise functionality beyond just financials, just beyond core financials. So, the growth to go from just a best of class financials application to an enterprise resource application is a transformation that's happening now and will happen at an accelerated pace in certain verticals, faster than others perhaps. But I think you'll see that evolution coming. More of the functionality required by the entire enterprise is embraced. You're still getting a best of class solution, certainly with Sage Financials, but now you're getting the other business capabilities, Sage HCM, Sage Payroll, Sage Manufacturing as additional components within Sage Intacct, leveraging that great accounting finance architecture that we've got now with all of the other expanded capability. Hopefully that answers your question. I think that's...
It does. And I'm going to have a little build up there, with respect to the comment related to Workday. And, when I look at the Workday product, obviously, if you look at their financial statements, the way they are trying to position themselves is very enterprise. Okay, the way their sales comp is structured, the way their market positioning is structured, they don't like to play in the mid-market space in general. Okay, and then there is going to be another layer of the HCM product. In fact, construction is a beast. When I say it's a beast from the payroll perspective. The way construction is going to recognize its own payroll, the way it is going to do the union reporting, it's very different. Okay, so the product that is designed for, let's say, the professional services industry, and Workday in general is a very software, media publishing, telco-centric product. I mean, they don't like to, I don't know if they like to play in construction space. I don't think they will have the out-of-the-box functionality for the construction space. So number one, construction is a very different beast in general, not only from the payroll perspective, it's going to be reporting as well as ERP. And then where do you see the limitation of Sage Intacct? Are you thinking that, you can probably serve $1 billion in revenue, $2 billion in revenue, which is the largest customer that you have served so far, and you are always going to get into the transaction limit of the system? What is the... So where do you like to see, Sage Intacct positioned overall from the cap perspective in revenue?
Yeah, I see I think the upper end is unbounded for Sage Intacct. When I started here, we were very much a mid-market, lower mid-market application. If Workday and Sage Intacct were in the same deal, one of us was in the wrong deal.
Yep.
I think today we see Workday quite frequently in deals. We see companies that are looking to go off an SAP on-prem solution to a cloud-based solution, evaluating Sage Intacct. That was probably not seen 5 years ago. Now we're starting to see that. And I think we are encroaching on the upper end of the mid-market. I won't say global enterprise yet, but that's not something that's out of reach for us. But I think the upper mid-market, and you're seeing Workday step down, I think, to the mid-market coming off of enterprise. Everybody's looking for incremental revenue growth. And it's not uncommon for those enterprise vendors to start trying to work their way down into the mid-market. I think it's historically always been a bigger challenge for a large enterprise scale ERP to go down market than it has for smaller mid-market players to go up market. I think it's a much more difficult transition to go from big to smaller than it is to grow organically from small into bigger. So it's a challenge in the marketplace. It's one we're ready for. I no longer say if Workday and Intacct are in the same deal, one of us is in the wrong deal. I think we're seeing it more and more frequently, and we're going to see it more frequently, and we're going to provide robust competition to those enterprise vendors who have had a limited, let's say, a limited landscape of competitors in the past. There's going to be new competitors coming in, and these, the well-architected cloud multi-tenant applications are going to scale transactionally. They're going to scale functionality-wise, and they're going to meet the needs of those marketplaces. Yeah.
Yeah, could not agree more. And I think you are right that when you look at these enterprise products, the number of layers that they are going to have, for example, let's say if you look at the number of approval flows, even from the financial traceability perspective, that could be overwhelming for the mid-market customers. And just to disable those and serving the mid-market could be extremely challenging. And that's why I personally like to set the boundary in terms of whether you are the enterprise product, because that's a difference. Now, some vendors, for example, I think you might consider Unit 4 as your competitor, I guess. They have launched a, trimmed down version of their financials for the mid-market, just because the mid-market has very different needs. So I don't know if you are in a position to provide the actual number of what is upper mid-market for you, because mid-market could mean a lot of different things, to different companies. Some people say that, 500 million is my 1 billion is my mid-market, 2 billion is my mid-market. So in your mind, and I don't know if Sage has any sort of a guideline in terms of what is a mid-market for you guys. Do you have any sort of insight there in terms of the number? What is mid-market for you guys?
Yeah, and I think it's a combination of things. It's numbers of employees. So you could have a $1 billion financial services company that's a 50-person entity. So managing a 50-person entity, one would say is, QuickBooks should be able to do that. Many times QuickBooks is doing it. So there are $1 billion financial service companies running QuickBooks today.
Yeah.
Maybe struggling. Maybe they don't know what they don't know. But so I think dollar value is less of a good measure than I look at it as three layers. What's the transactional nature of your business? Where are the transactional bottlenecks? Are you doing 40,000 transactions a year or 400 million transactions a year? So a platform that will scale transaction, a platform that will scale to the number of users. Do you have 10 business users or 10,000 business users? How many people are interacting with the system? That's going to be another processing bottleneck for the system. And then thirdly, those two elements are going to be the leading indicator of what your revenues are. So I think if you understand the transactional model, the volume of transactions, the user model, the volume of users, that's probably going to be a better indication of what your revenue is than just looking at revenue and saying, does your application fit this revenue model? So yeah, we have companies that are doing 5 billion in revenue, but they may not have that huge a transactional footprint or user footprint. So, I think for Sage Intacct, when we look at mid-market, we're probably looking at companies between 500 and 5,000 employees, right? That would be our mid-market, where the 5,000 would be the upper mid-market range. Now, if you went to a Workday or an SAP or someone, they'd say, 5,000 employees is probably our lower mid-market enterprise users, right? They're looking at companies upwards of 100,000 employees and the complexity that kind of transactional volume produces. So, in my mind, a better indicator would be that employee range. We could do from 50 to 5,000 employees quite successfully, and we have done it quite frequently.
No, great points. I completely agree with you. And especially, I like your comment related to the number of transactions. And I don't know what's a transaction in your head. Is it going to be a sales order? Is it going to be a purchase order? Is it going to be the GLs? Because it could, vary based on that as well. If you are treating a, ERP system just as the accounting system and the GL and financial reporting layer, then it's a different deal versus you are using for much deeper depth of the transaction and how thick your sales order is going to be, how many line items you are going to have. I think that would dictate the system capacity as well. Would you agree with me there? Disagree? Any other comment?
I definitely would. I mean, there's a difference between an e-commerce transaction where I bought a pair of slippers off the e-commerce site and, there's my transaction versus a company that's selling multi-element arrangements, complex subscription agreements. So a transaction in that world could result in hundreds, if not thousands, of back office ancillary transactions. One sale transaction to a software professional services company could result in thousands of revenue recognition transactions, billing transactions happening. So there's definitely the nature of the transactions are important. I kind of look at it both in terms of, the volume of transactions and the complexity of the nature of the transactions. And it's not an easy one size fits all model. So you really have to look at it for the different verticals and kind of get a sense for within this vertical, what would constitute a mid-market company. In the software space, a mid-market company could be designated, both by numbers of transactions and revenue value. What's their annual revenues? A manufacturer or a construction company, it's done by number of sites, build outs. What's the value of our, year over year manufacturing revenue, manufacturing sales, cost of manufacturing. So I think, the nature of the transactions is certainly important to that, but that transactional volume, numbers of participants, even number of customers. How many different unique customers are touched by those transactions each year is a great indicator of what's in store for them.
Yeah, could not agree more. So we are close to our time now. Do you have any super short final words before we wrap, Mike?
Well, no, I enjoyed the conversation. Thank you for inviting me in. I hope we have helped give some people some insight into their next evolution of their ERP.
Thank you so much, Mike. Really appreciate you. And you have been super insightful and valuable for our audience. And hopefully they have some takeaways from this conversation if they are exploring their next ERP. On that note, thank you so much for joining. We are going to come back with Sage Intacct in the next quarter with their updates. And we are going to be inviting a lot more vendors. So just stay tuned for the series. If you joined for the first time, this was part of our quarterly update series where we invite the software OEMs and we are discussing their capabilities. On that note, thank you so much, everyone, for tuning in this afternoon.
Thanks, Sam.
I cannot thank our guests enough for coming on the show, for sharing their knowledge and journey. I always pick up learnings from our guests, and hopefully you learned something new today. If you'd like to learn more about Mike or Sage Intacct, head over to sageintacct.com. It's SAGEINTACCT.com. Links and more information will also be available in the show notes. Also, don't forget to subscribe and spread the word among folks with similar backgrounds. If you have any questions or comments about the show, please review and rate us on your favorite podcasting platform or DM me on any social channels. I'll try my best to respond personally and make sure you get help. Thank you, and I hope to catch you on the next episode of the WBS Podcast.
Thank you for listening to another episode of the WBS Podcast. Be sure to subscribe on your favorite podcasting platform so you never miss an episode. For more information on growth strategies for SMBs using ERP and digital transformation, check out our community at WBS.rocks. We'll see you next time.